Hello and welcome to our weekly Market Roundup, your one-stop source for the latest in global market trends, key economic insights, and top financial news. I'm your host Daniel, bringing you the highlights and the happenings from around the world. Last week's market action highlighted the ongoing tension between inflationary pressures, central bank policies, and regional economic performance. As we head into another pivotal week, investors are once again asking, are global markets headed for a soft landing, or is prolonged volatility on the horizon? Below, we break down last week's key developments and preview the major economic events likely to drive market sentiment this week. US markets performed well, with the S&P 500 rising 1.11% and the Nasdaq up 1.13%, largely driven by robust tech earnings. However, the increasing 10-year Treasury yield, which climbed to 4.07%, tempered gains. Higher yields signaled that the bond market expects the Federal Reserve to maintain a hawkish stance as inflation remains persistent, putting pressure on sectors sensitive to interest rates. U.S. jobless claims unexpectedly jumped to 258,000, their highest level in over a year, suggesting potential softening in the labor market. Meanwhile, inflation, particularly core CPI, continues to challenge the Fed's efforts to contain price pressures, reinforcing the likelihood of future rate hikes. In Europe, market performance was mixed. The Stoxx 600 gained a modest 0.66%, with Italy's VTZ MIB outperforming at +2.13%. Inflation concerns, however, remain a dominant theme. In Germany, factory orders fell by 5.8%, signaling a potential slowdown in the region's largest economy. Investors are hopeful for an easing stance from the European Central Bank, but inflationary pressures have kept expectations tempered. The ECB continues to face the difficult task of balancing inflation control with supporting growth. Although some market participants expect potential rate cuts later this year, any loosening of monetary policy remains highly contingent on sustained moderation in inflation. The FTSE 100 dipped 0.33% last week, as inflation remains a persistent challenge for the UK economy. Despite some softening in headline inflation, the Bank of England has maintained a hawkish stance, signaling further rate hikes could be necessary to combat price pressures. This has weighed on investor sentiment, particularly in domestically oriented sectors such as real estate and consumer goods. Japan's Nikkei 225 surged 2.51%, buoyed by a weakening yen, which closed at 148.70 per USD. The Bank of Japan continues to maintain its ultra-loose monetary policy, diverging from the tightening trend in other developed markets. Exporters benefited from the yen's decline, driving stock gains, though inflation remains a concern as core prices continue to exceed the BOJ's 2% target. Chinese markets were the hardest hit, with the Shanghai Composite and Hang Seng declining by 7.80% and 6.53% respectively. Despite continued government stimulus efforts, weak consumer demand and an ongoing property sector slump have kept investor sentiment firmly negative. Growing doubts about the effectiveness of recent policy measures have cast a shadow over China's ability to stabilize its economy. As we look ahead, Several major events are set to shape global market movements this week. Inflation remains the top focus for U.S. markets. The CPI report for September will provide key insights into whether inflation is moderating. Markets will also watch closely for the retail sales data, which will gauge consumer spending resilience in the face of persistent price pressures. If inflation surprises to the upside, bond yields could rise further, adding pressure on equities, particularly in rate-sensitive sectors. The ECB's interest rate decision and Eurozone inflation data will be pivotal. While no major rate changes are expected, ECB President Christine Lagarde's commentary could signal future policy directions. Meanwhile, in the UK, the release of September CPI data will be critical in determining the Bank of England's next steps. Persistently high inflation could lead to more aggressive rate hikes from the BOE. Japan will release its national inflation data for September. With inflation consistently exceeding the BOJ's 2% target, markets are watching closely for any signs that the BOJ may pivot from its dovish stance, particularly as global inflationary pressures remain elevated. China will release its Q3 GDP, industrial production, and retail sales figures, all of which are critical to gauging the health of the Chinese economy. GDP growth is expected to slow to 4.6% year-on-year, reflecting ongoing challenges in consumption and real estate. Should the data disappoint, it may trigger further concerns about China's recovery prospects and weigh on global growth expectations. That's a wrap for this week's Market Roundup. Thanks for tuning in. Be sure to subscribe and hit the bell icon to stay updated with the latest market news and analysis. Until next time, stay informed and stay ahead. I'm Daniel, and I'll see you next week.